Thursday, 17th of December. My name is Dylan. Welcome to my daily trade analysis video. So today we're going to talk about a few currency pairs, starting off with the dollar against the Japanese yen, since we had the Federal Reserve raising the federal fund rates to about a quarter percent to 0.5, and therefore we have seen that the US dollar has appreciated as a result, but not as volatile as it is supposed to be, because mostly it has been pricing. Most traders has already expected that the Federal Reserve will increase interest rates. Right, and of course, therefore, going to 2016, we're definitely going to see the US dollar appreciate further again as the Federal Reserve continues to raise interest rate gradually to normalize their policy. And so let's come back to the chart itself for the dollar against the Japanese yen. If we look at the day one chart itself, based on the Fibonacci retracement, we've seen that the price has been supported very well at the Fibonacci retracement of 50%, price of 120.89, and therefore it appreciated from there. And right now, it has finally reached, during the 4-minute chart, reached the first exhaustion level, the price of 122.57, measured by Fibonacci expansion. We are definitely expecting the price to appreciate further, and especially it has already broke above the key support level here at the price of 122.27, close above it. So we are waiting for the price to retrace to a better price while we wait for an opportunity to go for the buy. So we can base on the 1-minute chart, we can base on the 15-minute chart, either both. Wait for a further retracement, then we can look for the buy opportunity from there. Alright, so if in the 1-minute chart, we may want to take the 20 moving average as the support, and it's even lower than probably the 55 moving average. That's pretty much as of now, or unless if price came down and got supported at a previous key resistance level at 122.27, that could be another level to look for the buy. And just take note that tomorrow itself we have the Bank of Japan press conference and monetary policy statement. And take note that the Federal Reserve, since they have finally took action to raise their interest rate, other central banks will probably, you might probably see other central banks taking further action as well. I do strongly believe that the Bank of Japan will still need to ease their monetary policy further if they really wants to reach their inflation targets. Alright, so that's pretty much for the dollar against the Japanese yen. Let's have a look at the euro against the US dollar. So as well, similarly, the euro against the US dollar has depreciated as the Federal Reserve raised the Fed fund rates, and we have seen that price has fell to the bottom of a probable falling trend channel. Alright, so if we look at the monetary policy, the outlook itself, of course, there's a huge divergence, and it's right now clear enough that the US is going to raise interest rate. The Euro Central Bank is most likely to continue to ease the monetary policy in order to stimulate the economy to reach the inflation target, stuff like that. So right now, based on the chart itself, we would just like to wait for the price to trace from the depreciation right here, maybe back to the top of the falling trend channel to go to look for the sell opportunity. Alright, we do believe that the appreciation back then before was really pretty much overrated, and therefore it is pretty much about the time that the euro dollar will continue to resume depreciation from here. Just too bad it did not reach the key resistance level at 1.1121. The retracement level was 61.8%. The key support level back based on the past chart itself. So that's pretty much for the euro against US dollar. Next, we have the New Zealand dollar against US dollar, which is appreciating. This is a 4-hour chart, appreciating within a rising trend channel. We have seen that the price has been resisted numerous times towards the top itself, and right now it is finally retraced, making retracement, falling towards the bottom of the rising trend channel. So let's wait for the price to retrace further all the way back to the bottom of the rising trend channel to go for the buy. And of course, you may want to just plot a Fibonacci retracement, wait for it to come back to the retracement level 30.2%. That will be the key level to go for the buy, so that will be the price of 0.6676. So that is really straightforward for the New Zealand dollar against the US dollar. Just I was browsing a bit the news, and I just saw that New Zealand's English says the Kiwi dollar is still overvalued. Right, so we may need the Kiwi to appreciate even further in order to apply more pressure to the Reserve Bank of New Zealand in order to take action to talk down the currency, or to take action to depreciate, to weaken their currency in a way or two. So that's all for the New Zealand dollar against US dollar. Next we have the pound against Australian dollar. In the day one chart, we do see that there is a falling trend channel that's going on right here, and of course, in the weekly chart itself, we have product Fibonacci retracement. We've seen that the price has been supported at the retracement level, sorry, again of 0.2%, price of 2.0407, and begin to appreciate till it touches top of the almost touches the top of the falling trend channel at BS4. But right now we've seen that it is also seen supported at the support level at the price of 2.0732. The thing is that since we have the Federal Reserve raising interest rate, the next one that may raise interest rate the earliest possible is probably the Bank of England. So that eventually we might see the pound to appreciate. So against Australian dollar, Aussie is currently, if we take a look at the Australian dollar, it is still at a pretty low price. 0.7161, probably not strong enough for the Reserve Bank of Australia to take action. So we do believe that Australia will go up as well. The pound at this point of time still a little bit weak on the side. Although technical structure itself may suggest it appreciates to here, but there's really pretty much conflict, a lot of confusion and conflicts between these two currencies in terms of the direction. So may suggest to avoid this pair for the time being, even though we do have a pretty nice technical setup right here. And since we're talking about the Australia against the US dollar, let's come back to the 4-hourly charts. We have seen that the price has been consistently supported slightly above the retracement level of 61.8% based on the 4-hourly charts. And over here, it is kind of a no-brainer that is like moving in the range and just bouncing off from the bottom to the top. So right now it's at the bottom. You may want to look for the buying opportunity right here till it touches the top, somewhere the price of 0.7261. You have to take note of that level to take profits. But if not, we do still remember that in the day one chart, we do see that there's a structure right here, more like a ascending triangle. So and the price is coming down from the top of the formation, and therefore we are expecting the price to break below soon till it touches the rising trend line as right here to go for a longer term buy. And of course, there's always a possibility that it goes up right before it actually breaks down, since we have seen so much support at this level, the price of 0.7161. Sorry, 0.7161, yes, that's correct. Alright, so that's pretty much for today. So thank you for watching, and I'll see you again tomorrow.